I'm Owen Bigland. This is the Inside Edge video blog. Okay, it's Saturday. Let's do one of the type of blogs I enjoy doing the most, which is that mindset, investor mindset versus speculator, the buy and hold strategy that you have to have if you want any type of financial success, whether that's saving for retirement or buying your first home or investing in real estate. And I get people sometimes on my blog here that'll comment and say, when you keep sending the same message here, especially on my Saturday blogs, it's the same thing, the buy and hold and all that stuff. Change it up a bit. Well, no, when people tell me that that's happening, then I know I'm doing it right, because the strategy that I'm telling people, and the only real strategy that will work, which is ignoring the short-term volatility in real estate and the stock market, buy and hold, monitor, and keep reinvesting the cash flows. That's the strategy that works. It's slow, methodical, but you're not changing strategy. So many people, they move their strategy or their investment philosophy as the wind blows, and that's not how it works. You stick with a buy hold. You're not going to be a market timer type program, and you're going to do incredible. You don't change at the whim of what the market says, or if we go into a recession, or when the market is in a buyer's mode or a seller's mode, when the stock market's at 52-week highs or 52-week lows. My strategy never changes. I just systematically keep investing, and I focus on the long term, not the short term. And that's what I've been pounding home here for over 10 years on my blog. We don't change strategies midstream. You stick with the game plan and you'll have incredible success. But the problem is, though, of course, is that especially these days with social media and everything else, you're being bombarded with these amateur economists, or even sometimes they are legit economists, that will come out and make these predictions that the market's headed for a crash, the Vancouver real estate market is in an epic bubble. I've been hearing this for 25, close to 30 years in Vancouver real estate. The thing that they don't realize is that they sound professional, a lot of these guys, but they really should put a disclaimer at the front before they start talking and saying, listen, I'm an economist and I'm going to make a prediction here, but deep down I have no clue what's going to happen. I'm just taking guesses at this. I'm throwing a dart out at this. Maybe it happens, maybe it doesn't. But of course they don't do that. There's that old saying, when it comes to market predictors or market people that predict a crash, remember, they're never wrong. They're just early. And sometimes they can be early by a decade. The market goes up 200%, and then it takes a 20% correction. So you still would have been up 180% if you just would have done the buy, hold, kept your head down, and keep moving forward type strategy that I always tell people to do. But a couple of things I want to point out here, just to reaffirm here, the steps on the ladder to success, to financial success. And whatever that financial success is the sky is the limit. For some people, it's to build a $1 million portfolio in their retirement fund and retire, and that's the goal. And hey, you can live very well on $1 million in certain cities, absolutely. So everyone's goals are different. For other people, it might be to accumulate a $10 million investment portfolio in real estate or stocks. You set the goal wherever you want. But the plan is you set the goal, you start the process, and then you stick with it. You don't change as the wind blows. But step one, as I've often told people, is to buy your principal residence sooner rather than later. But again, I always throw out the 8 to 10 year holding period. Buying a home to live in is a long-term commitment, 8 to 10 year minimum. Or if it's less than that, you have a backup plan where you can, if the market is down and you've got to move, you can at least rent the home out until the market recovers, which it always does, and then sell it. Step one, though, is to buy your principal residence. Take advantage of these low interest rates. Take advantage of the leverage. Take advantage of the principal residence exemption. But it's not going to be easy. The first step is to save for the down payment. If you're living in Vancouver or the Lower Mainland, you're probably going to have to use a conventional mortgage, 20% down. So even if you're buying a 450 square foot studio in Richmond for $500,000, you're going to need $100,000 down payment after tax saved. It's not easy. Then you've got to go through the gauntlet of going to a bank and getting approved for the mortgage. And that is not easy, contrary to what you'll see on Twitter and these other things. It is a tough task to get pre-approved for a mortgage and get qualified. Once you're in, it's smooth sailing after that. You've crossed a huge hurdle in life once you're into your principal residence. Live in it, enjoy it, keep it, you are going to do incredible. All the capital gains will be tax-free when it comes time to sell it. The alternative, of course, is to rent. Renting long-term, nothing wrong with renting short-term in a city like Vancouver, is going to be devastating for you financially. Do the math on it. You're renting a one-bedroom for $2,200 or $2,300 a month. Nothing wrong with it for the first 2 or 3 years while you're saving for your down payment. Or, if you move to Vancouver and you can't commit to 8 to 10 years, you think you might live here for a few years, then just rent, as I've often said. Don't get into principal residence until you've got a long-term commitment there. Because again, the friction costs of getting in and out of real estate, the PTT on the way in, the commissions on the way out are extremely expensive. Step 2 is to max out your RRSP and TFSA. Avoid all these market timers and pundits that will tell you that we're in for a crash in the stock market, because I've been in this for 33 years and it never ends. Instead, focus on the long term. You're going to be retiring and you're going to need that money in 20, 30, 40 years from now. You've got a lot of runway there. Best plan for most people, just index invest, buy the S&P 500, buy the VIG, buy the TSX through Vanguard or iShares. Then, if you want, maybe buy some individual shares that hopefully pay you a dividend to hold them. Keep a little dry powder for corrections if you want, but just systematically keep investing. Don't worry if the stock market takes a 15 or 20% crash next year, because it probably will. I'm expecting many 10, 15, 20% corrections over the next 3 or 4 years in the S&P 500. We just went through a 30 plus correction at this time last year. It's par for the course. If you want to get those superior returns, you're going to have some volatility along the way. The alternative is to try and time the markets getting in and out. Forget it. You're not smart enough. Nobody is. Even the pros on Wall Street don't even do it. Third and final step, after you've got your principal residence, after you've got a good handle on your retirement funds through your TFSA and RSP, then maybe you can buy an investment unit, buy a property to rent out. But again, you're going to need 20% down, and again, it's going to be a long-term hold for you. Most of my clients that I'm my investing side are going to buy these homes for 15, 20, 30 years. Let the tenant pay down the mortgage. Again, you're going to be bombarded though with people that are going to tell you that the market's overpriced, it's going to crash. We are going to have a correction here. I've been through so many of them, I've lost count. Right now, the Vancouver market is very strong, especially the detached market. Now the condo market's picking up steam as well. How long it'll last, I have no idea. Might go through till the fall. One of these days, though, we're going to take a breather. The price of those detached homes is going to come down 5 or 10%, and the price of the condos is as well. Then maybe it'll tread water for a few years, catch its breath, and for the next leg up. That's how real estate works. That's how the stock market works. But if you think you're going to time and get in and out of markets and be a Houdini, you're overestimating your ability there. Instead, when you're able to qualify, you've got the down payment, you can comfortably afford it, you buy it and hold it. And leave yourself a buffer for interest rate hikes, or if it's an investment unit, maybe you lose the tenant and you don't have a month's rent, you miss a month's rent before you can get another tenant. That's all there is to this. My book, if you've read my book, I keep it really simple, and that's what I think just trips up so many people. They think this sounds too easy, it's too simple. They must be, everyone wants you, and the internet will tell you, and these analysts and predictors and economists will tell you have to be doing something, getting in and out of things, when you don't. Smart money, smart investors, successful investors don't play that game, as I talk about it in my book. I have friends on Wall Street who manage money for extremely wealthy people, and their churn or their turnover is very limited. It's buy and hold strategies for the vast majority of these people. But the last thing I'll say, and again, what trips most people up, watching BNN, and then I saw on my Twitter feed, they bring on these economists all the time on BNN. This particular guy, I'm not even going to name him because I don't really think he's all that great. His predictions, his track record has not been good, but of course they always forget about that. They keep moving the goalposts on their predictions is what I find. It's very common. But he came out saying that, the Canadian housing market, especially Toronto and Vancouver, is in a bubble that he has never seen before. It's just completely overinflated. And of course, it gets good headlines. And then I saw all over my Twitter feed that here's an economist that's calling for a bubble in Vancouver real estate and Toronto real estate. But, if they dug a little deeper, I can remember this guy being on BNN years back saying that the S&P 500 was overvalued. NASDAQ was grossly overvalued. Apple, Google, Facebook, 3-4 years ago, he said those were overvalued. And yet here they are probably up another 100 to 150% then. They never talk about, go back. Somebody should do a timeline with these guys and record everything and see what their track record is. It's dismal for most of these guys. They just forget about what I said 3 or 4 years ago. I don't remember that. Let's just keep moving the goalposts now. Listen, this guy, again, it's like a broken clock. You're going to be right twice a day. And again, people that are calling for a correction are never wrong. They're just early. Of course, we're going to get a correction here in Vancouver real estate. I don't know if it's in a bubble, and a market crash is a 50% correction. That's what, in my opinion, a crash is. I don't know if we're going to be anywhere near there. But 5, 10, 15%, absolutely, that could easily happen. But I don't know when it's going to happen. It could be this year, next year. It could be 8 years from now. Meanwhile, the prices continue to go up another 50 or 60%. Don't play that game is what I'm telling you. But the thing is that these bears, they get all this attention, and in Twitter and some of these other blogs I saw him mention, they hold him out like he's some sort of a demigod of some sort. That when this guy calls for a correction, man, it's gotta happen. It's gotta be true. Meanwhile, just a week prior, I saw 2 far higher profile economists that have got a way better track record than this Canadian guy, who were saying that, hey, I see the housing market staying pretty strong. I see the stock market staying strong. Good time to be an investor. Stick with the long-term program and you'll do fine. There will be blips along the road. But do those guys in the Wall Street Journal, I saw one, get a whole lot of play or a whole lot of attention on the Twitterverse? No. Too positive. They don't like that stuff. But when an economist with a very poor track record comes out and says that, hey, everything's in a bubble, all of a sudden, hey, it's got to be true. Just don't play that game. This is what trips up so many people. And a lot of this stuff is just ego-driven. Plain and simple. This guy, economist I'm talking about, huge ego. Huge on this guy. They should be running a disclaimer across the bottom. Listen, my track record hasn't been very good, and what I'm telling you here may or may not happen in the next 2, 3, 4 years. I don't know. I'm just taking guesses at it. And that's all they're doing. That's all anyone is doing. Ask some of the greatest investors in the world, a Warren Buffett or a Jack Bogle. They'll tell you the same thing. Don't try and get into this trading game and trying to guess where markets are going. Instead, the big advantage you guys have as individual investors is a simple buy and hold strategy. Buy your principal residence, live in it, enjoy it. That's the nice thing. It's tangible. You need a roof over your head anyways. Index invest in your RSP and TFSA. Just buy and hold good quality dividend paying companies, the Canadian banks, Home Depot, Apple, Johnson & Johnson, Pepsi, Macdonald's, Visa, MasterCard. Some of these will drop off. Not every one of these is going to be a spectacular winner, but if you build up a nice diversified portfolio, many of those are going to be up 3, 4, 500% over the next 10 or 15 years. I'm already holding dozens of stocks that I'm up over 700, 800, 900% on over the last 10 years. But you also get a few that fall by the wayside. That's why you want to diversify. And that's the nice thing about not only having some stock portfolio, but why I like real estate as well. But you've got to tune out these so-called experts because they're not experts. Sure, they might have gone to school to become an economist, but the predictions they're making are guesswork. Don't get into that game. And that's what trips up so many people is listening to this short-term rhetoric about markets never being in the right mood. I can tell you that if you're looking to buy a principal residence, you're on the sidelines because you think the market's too strong right now. We're going to get a cooling, and if you want to wait for the next cool down to buy, go ahead. Although remember, I've often talked about it, when markets start to go down, most people can't buy then. People like to buy when the market's going up. Very few can buy when a market's going down. It's never going to be the right time, but you're never going to find a time. I mean, if you're waiting for a good buying window to buy, to start saving for retirement and buying some good stocks, I'll tell you, it never looks good, because no matter what you do, you're going to turn on the TV or go online and they're going to be telling you that the stock market's ready for a crash. You had an incredible window here at this time last year during COVID, but do you think many people bought? Some did, for sure. I was buying hand over fist, and as a matter of fact, I broadcasted all of it on my Twitter feed. I put it all out there, fully transparent, what I was buying day after day. And take a look at some of the comments back then. Crazy to be buying Visa at this price. Crazy to be buying Costco at that price. Yeah, now I'm up 100%. I'm not trying to make that sound like I'm a hero and look how great I am. I just systematically buy. I would have been buying last year regardless of what the S&P was at. But that's the advantage you have as an individual investor, is that buy and hold strategy. Tune it out and then work that time you could be spending analyzing markets and economic forecasts and predictions like these guys on BNN. Instead, use that time to read books, learn, get better in your career, start a side hustle, spend time with your family, get in shape, whatever. You know, my real estate portfolio is 100% on autopilot, and my stock portfolio, which is large, I spend very little time on. I do enjoy studying some of these companies, and I've always got dry powder coming in every week to reinvest. So I've got to do a little bit of stuff with it. But for most people, you could just index invest, buy your principal residence, and call it a day. And if you want to listen to BNN or CNBC or listen to podcasts, because I do as well, but do it for the most part strictly for entertainment purposes, and or getting stock ideas and investing ideas. But as far as the negative stuff and the predicting of where the market's going to go and we're going to head for a crash, tune all that out. You're wasting your time. I'm Owen Bigland. As always, I'll see you next week.